Hey guys, it's Will. Hopefully you're having a good one. So we're live for our Sunday stock talk today. And today we're going to go over the top quantum, AI, data center, and space tech companies to be watching right now. So there's quite a few companies that we're keeping an eye on this week. And we're going to go through them in a pretty short amount of time. And I want you guys to, if you have any ticker symbols, feel free to comment them down below. We can take a look at what you guys are watching this week, and let's jump into it. So first stock we have here is going to be D-Wave. So D-Wave is going to be over in our quantum list, and we just released an APLD video just a few moments ago on what we're seeing for this data center stock APLD for this week. In short, they're building some data centers for top AI companies, and this week we have our earnings out that we're watching in stock meets, and APLD Applied Digital is going to be reporting earnings Thursday after hours, so we're going to be watching there. And we just did a full video recap, but essentially they got a support level at about $25, and they are continuing this uptrend. We're going to see if they make this move up here into $29. We got some long-term positions we're holding, and no short-term trades now, but we'll see how they react at market open. So that was kind of the deal with APLD. But yeah, we just did a full video on it. Let's jump into QBTS. So we're going to go over to our quantum AI watch list. And it's been a monster week for quantum. We have some Rigetti positions, some IonQ and QBTS positions. We've been covering this stock, QBTS, since around, I want to say, let's see, was it $1? Let's see, it was right here, about $1.30, $2, $1.30, somewhere in here. We started covering QBTS. We had the privilege of actually meeting the CEO of this company at a recent event in Scottsdale. It was a quantum computing conference, so that was great. And I see Goody's in the chat. Goody says, Redwire. We could take a look there. Thanks for tuning in, Goody. JJ says, we're so back with the Redwire. Yeah, Redwire is doing some good movement this week. So we'll take a look, as that's one we've been trading recently. Let's see. Keystone Giant Pumpkin says, hey, Will, what's going on? How's it going? How's the week getting ready for this market open here? Biggie. TSSI, I love it, Biggie. We have a position over there we're watching. We'll definitely be watching there at market open pretty closely, as we entered a position with them on Friday. So we'll be watching there. Our Shiver says, hi, what's going on? Good to see you. And Gainer says, BZAI. Johnny's talking BBAI, APLD, CTM, CPSH. Johnny, how are you doing? How are things? Good to see you here. And Keystone, Giant Pumpkins. I had the Giant Pumpkin weigh off. Yes, I've been following this. You weighed your pumpkin. How did it do? 636 pounds. And the largest one there was 2,029.5 pounds. Oh my gosh. You got 13th out of 23. Hey, 636 pounds is still absolutely insane. So the progress of the Keystone Giant Pumpkin was a success, I'd say. Tian, hi, how's Irene? Would you open up a position, see if it has potential? Let's jump into it. So QBTS, along with most quantum stocks, have been surging. We've seen them continue their trends. It almost looks like this little trend back here, along with that NVIDIA dip where Jensen had that announcement that crashed the market. Almost looks tiny compared to this overall uptrend that we've seen as it continues to rocket and continue to drive up higher value on the quantum market. However, is there more value being brought by these quantum companies? That's kind of the question, right? So QBTS, they have a market cap now of about $11 billion. And while they work with Google and NASA, Los Alamos National Laboratory, they still had a negative net income in the last quarter of $167 million with very minimal revenue. In fact, you can see the net income increasingly negative there on QBTS. And if we had to, I was just talking with a friend, Majid, actually, who we went to this QBTS conference together back in earlier this year. And we're getting to see the CEO speak. We got to meet up with some companies while we were there. We got to do some cool chats, after the events, and have dinner with some of the executives and drinks and things like that. And when we were talking today about where the market's at, we said, is this the top for quantum? And the question was, are we going to see, what would the top be 5 years from now? Because it's possible right now that the market is trading these quantum stocks as if it's 5 years from now, as if it's 10 years from now. And they're pricing in for the future, essentially. So that's why you see quantum riding up to new heights. Now, this valuation currently, from a financial perspective, there's nothing in the financials that would point to the justification of their current valuation. And it's fairly, I would say, almost primarily going to be related to the fundamentals of the business, that quantum computing has the ability potentially to optimize the compute of what we're seeing now, which is a massive drive for more compute for AI. And so when D-Wave comes in, when Rigetti comes in, that's obviously the kind of big idea. But is that the big idea? Is that the big idea? Because when you go to these conferences, I noticed it's not really about the commercial side as much. Mostly when I've gone, maybe at D-Wave, but when I've gone to conferences for Rigetti or for IonQ recently, it was very much based on the science, where they're going and things like that. So they were fairly, I guess, pessimistic about the stocks going super high up, because a lot of the scientists that are down there are saying, we're still really far away from this working. And however, there is something that we're recently going to be implementing, which some of you guys have seen. We have like projections over in Mercatus, and you can choose any AI model you want to project. I believe pretty soon we're going to be able to take all the projections for timeframes, have their confidence scores weighed, and then run the confidence scores into D-Wave to potentially have an output for which projection would be most likely. And it's a really interesting thought. And I was just talking with our developer about kind of doing some changes, as we recently added some really cool stuff into this machine. And we were even at least I was thinking, hey, can we integrate D-Wave into this? But that's kind of not a super high level, I guess, application. Like it can work financially, but that's just how it looks. So when it comes to QBTS, we see them surge up to $34 a share. The RSI, the MACD, everything's looking overbought at the moment. You see they're hovering over the RSI above 70. MACD's looking very overextended. If you had to guess what they were going to do next, I would anticipate a sell down from that $34 range, most likely back down to this $28, $27 range, which is a previous resistance level they struggled to break out of before rocketing, and potentially would be the next level of support for D-Wave. Now, of course, with the momentum they have, they could continue up, but from the valuation standpoint and where they're at financially, it doesn't really make a whole lot of sense. Bravo says, hey, Will, sold 50 of my QBTS. That's pretty awesome. Congrats. Yeah, so QBTS right now, like most quantum stocks, I would expect them to stabilize around 25% less than where they're currently at. I think a stabilization for quantum stocks probably down in this range around $15 to $25 would make a lot of sense for their valuation. However, if they do continue to trade based on where they're going to be in 5 years, where they're going to be in 10 years, then we might see most quantum stocks continue up into that $50 to $100 range. But again, it would be based on sentiment. And as we've been tracking the financials very closely, it doesn't appear that the value to the marketplace, if we're measuring value to the marketplace by the dollars that you earn, they're not bringing that much value to the marketplace by that way of measuring, which is usually how we measure uh, the value to the marketplace. So it's just really an awesome feat for our long-term holders, including our stock mates and myself that are in these companies, to see these surges. But it's also a great time to say, hey, danger, danger. We're up at all-time highs right now, and the valuations still don't really make sense given where they're at. So it's all about sentiment right now. Now, the next company that we really wanted to give a breakdown on was, if we're looking at AI, we're definitely looking at defense right now. And the defense markets, you got Big Bear AI, you got Redwire is one, and Redwire has been surging. We are looking for some recent stair steps and recovery from about $7 up into about into this $12 range. And we did see some push-ups. In fact, right now, as we're looking at where they're at pre-market and into this evening, Redwire is now up to $11.50. So they're continuing this run. They have now recovered about 35% or more, almost 40% from where we were watching them and where we continue to buy on Redwire. So we see a good trade happening there as Redwire continues. It's really just at this point a valuation. It's a valuation equilibrium. It is that's Redwire has the types of deals that put them in a position to validate their company with being one of the 14 prime contractors on the IDIQ contract here with iSpace. It's a $2.6 billion deal for landers, for infrastructure in space, lunar. We're talking Mars missions, these types of missions that could pay out big for Redwire, and they're one of 14 contractors. You know, when you see the deals that they're signing and you see their current market cap, you know, it's very simply put, total assets and their revenue it's been higher than their market cap. And when that's the case, you get a classic kind of undervalued situation. So that's what we see with Redwire. Redwire is now at a resistance almost at $11.50. We've been watching for a while. Good to see them make that recovery. We're still watching to see them continue up, but we do now have this previous resistance that could act as a support for them here at about $10 a share. So they're up to $11.42, nearest support at $10. If you're looking for a trade, let's say for this week, which we may watch Redwire tomorrow morning, they do have this previous resistance they were kind of bouncing through over the last few days at about $11 a share here, or $10.95, that could act as a support heading into this week. Let's see, Drilly, what do you think of UPLD? UPLD, I don't know. I haven't really looked at that one, but we could take a quick look. So that's what Redwire looks like. And then, so right now, probably on the overbought side, if you're looking for a shorter term trade, you can kind of see that RSI, MACD looking up there, possibly a pull down back down to that 1093 level here, unless they continue the momentum. We're going to continue to hold Redwire. I like this as a long-term play personally, because we have seen them, you know, find that support down around $8, and we have seen them make runs up into that $17, $20 range, or even as high as $26 a share. And so as they have validated here this support and they continue to kind of stair step up, you know, we continue to hold those long-term positions on Redwire as they're bringing value to the market, and the financials look pretty good. So when it comes to the AI data center plays, you know, we just did a breakdown on what was, it was not quantum, it was not aviation, it was data centers on APLD. So that was when we were watching APLD. We got a support level at 25, see if they hold that. And then you had some conversation here around Irene, which is IREN. Now, demand for the data centers are huge by big tech right now. Big tech needs data centers faster than they can build data centers. And so companies like Irene have gone up. Companies like APLD have gone up because they are providing that infrastructure for the big tech companies to scale with AI, as AI is taking off right now, and there's a tremendous amount of compute that's needed to run the AIs right now. So with Irene, IREN, they're now up to all-time highs that they've seen, I believe, unless we've seen them higher. I don't think so, not since IPO. And on the one day, you could just see this surge on the MACD, surge on the RSI. I just wouldn't really touch it because of where it's at from a technical perspective. But obviously, long-term in demand with these companies, you see them doubling the AI cloud. Okay, 23,000 GPUs. They continue to buy GPUs. If you look at AI cloud for the next big thing, purpose-built AI data centers, they are building AI infrastructure, tomorrow ready, owned and operated, and they're kind of renting out or enabling big tech to utilize the data centers for whatever they need. And so you got trusted delivery partners, NVIDIA, Supermicro Computer, Weka, and Dell Technologies, kind of similar to what we saw with APLD. And so when we look at IREN, and you look at the market cap, 13 billion, they're kind of in a similar situation here as APLD, and that you see the market cap surge, but has their financials actually caught up? Not quite. They're at 180 million in the quarter. Okay, so on track to maybe do around 500 to 600 million. Market cap's at $13 billion. And if we were valuing them fair value based on their total assets and their current revenue, they'd probably be more like a $6 billion company, a $6 billion to $7 billion company. Now, if we see their financials continue in the way that they have and ramp up with positive net income as they have, then of course this valuation could look really small because they could be doing bigger numbers right now than what is reported, because these are obviously from June and AI is getting more investments right now. And so with IREN, if you're looking at the financials, yeah, it would make sense that it pulls back down into this $42 or $38 price point. When you're looking at the long term, I mean, yeah, it could still be on sale, I guess, but it's just not going off of the facts that we have right in front of us. And so you would be buying what could be, it is way up there. It is shot up. It's had almost 25 consecutive green days. And when that happens, it's totally fine to buy at the top. You just want to have a plan. If you're in long term, okay, don't worry about it too much. Go ahead, buy in. If you're in the short term, you're going to want to have a clear stop loss or a clear entry and exit point for IREN. Chris says, I have 300 shares at $10.84. Awesome. Nice job. Michael says, what do you think about APLD? What are you holding through earnings? Yeah, personally, I hold APLD and I continue to hold them. I just did a video actually earlier today with a full breakdown on APLD. So if you want that, you could always grab it on the channel. It's in our recent uploads. Full breakdown of APLD. But we did one earlier just a few minutes ago. And while they are high up, it's kind of the similar take on IREN. It's like data centers are seeing a huge demand. And so we continue to hold them, even though maybe they're not perfect entries right now. You're still looking at a massive shift in the AI data center demand. And that's where these companies will benefit. So we'll continue to hold. Now, when it comes to other space tech companies, we got to touch on Redwire a little bit. The other one that we're going to be watching as well this week, you got Redwire for sure. One that we've been watching is ASTS. They've been a really interesting company to kind of keep an eye on this week. They have their 5G cellular broadband technology, and that's been really interesting. And aside from some of the top space companies we've been watching, there's still some valuations that are fairly high, and you want to get disciplined during these times because while you could buy something and ride hype, it's totally fine, but have a plan in place because you want to pick companies of integrity around this time. Almost always, if I can think back to all the mistakes that I made at any time, and I made a lot, it comes down to not choosing positions that would be of integrity. So like things that just make sense financially, on the balance sheet, make sense on the charts, make sense on the news, on the product developments, on the value of the marketplace. Like lining all those things up becomes more important when the market is green. You might think, oh, everything's going up, so I can buy anything. But I'll tell you, your returns will be almost disproportionately larger if you just focus on lining up all the probabilities of the things that have the characteristics of a stock that would attract institutions to buy. Okay, so Drilly says, I've been watching UPLD from $1.78. I'm not sure if it's a good long-term play. All right, let's just take a look at it. I haven't seen this one, I don't think. Upland Software. Let me take a look. They're at $2.37. They've kind of sold off and have been going through some manipulation recently, Drilly, so I'm not sure about them, but let's take a look. UPLD. UPLD software. Let's take a look. UPLD stock. 68 million. Market cap, pretty small. Revenue, 50 million a quarter. Negative net income. Holding pretty steady year over year, doing about over 250 million in revenue. And balance sheet, though, has been kind of declining. They got about 440 million, so about 90 million in equity. And it looks like they're focusing on software. AI-powered cloud software makes every corner of your business work smarter. Sales proposal automation, AI-driven knowledge management, AI-powered compliance, knowledge, multi-channel customer engagements, trusted by Dell, NetApp, Nestle, GE, powerful products, proven results. Okay. They got some awards there, solutions, products, news. Got some G2 badges, good for them. Financials look pretty favorable for their current market cap. 68 million, but their negative net income, though, is the only thing. How does a software company lose $13 million? That always like mind boggles me, kind of, where I'm like, how is a software company losing $13 million a quarter? Like, is it the office building? Is it it's not like the cloud credits, right? I mean, like, how? So that's kind of a red flag. And whenever I see a software company that has like thousands of employees, in this case 1,000 employees, it always feels really strange to me. It always feels really strange because I'm like, it's kind of like the whole Elon stuff, like with when he took on Twitter. It's like, we didn't need that many employees at Twitter. So it's kind of strange a little bit, kind of like red flaggy a little bit, but nevertheless, current valuations, it looks like they're declining year over year. So just kind of have that in mind. Financials don't look like they're signaling growth as you see them declining. See that decline, kind of declining revenue with net income increasingly negative a little bit there. And they've seen some manipulation in the past on their chart. So they seem pretty high risk, and I wouldn't probably invest in them just because of the integrity of the manipulation there, and then also the declining revenues. Probably would want to see more growth in the revenues, unless there was something specifically on their products that you were watching. Then maybe it could make a lot of sense. Otherwise, probably would stay away from them. Adam Interview says APLD earnings should be good news. Bullish momentum to continue given their coming deals and growth. The data center is online. Second one next June. Yep. So we have those coming up. Exciting earnings after hours Thursday, Applied Digital will be reporting earnings. Johnny says, Will, what are your thoughts on CPSH? They've got nearly 5 government contracts recently. They're in the space and defense, balance sheet looking good, and right on track. No, I've seen the CPSH stock that you have shared before, Johnny, and their financials look very fine. They look very good. Market cap's at 49 million, very small, higher risk for that case. But when you look at their revenue, their positive net income with 8 million in the quarter. Little decline on the annual there, but now it looks they're doing 8 million a quarter. It looks like they're on track to have an all-time year for the revenue, up 60% year over year. Financials look good, very disciplined pick. And when I see you bring them forward, I see growth potential there. They're at 19 million in total assets, disciplined, as their liabilities are only at 4 million. Market cap's really small, right? 49 million. When we looked at them, there wasn't anything that was like massively standing out, but as you mentioned, they're getting some consistent defense contracts recently, and U.S. Department of Energy, Office of Nuclear Energy. That's a really good department to be watching because, you know, with energy demand where it's at, with all the technology that's coming out today, we're in a golden age for energy companies, and they're seeing a lot of market trends that would give them momentum. Now, I don't see a whole lot of hype on the stock either. I don't really see any articles at all, which is a good sign. And I would be happy to cover them more. But when we look at their ticker symbol, looks like CPS Technologies. You kind of see here, they got some steady growth here over the last year. See them start to build that growth up. We have seen them have some manipulation in the past. I don't know what happened here. They were up to $30 a share at one point. I'm not really sure what happened here, Johnny. Maybe we could figure that out because that looks pretty crazy. However, you do see them start to make some uptrend here, and now they are on this trend here. And it seems like, if I had to say what they were doing, it looks like they are uptrending and currently doing something kind of like this. Okay, and if they can hold this support level around 320, looks like they might be on track to have some uptrends continue, something like this, about a 15 to 30% potential for profit. I like the financials. It looks good. The market's good. One thing to note, we kind of talked about this with the machine. I don't know if you saw, Johnny. I know you're a machine member. And if you guys ever want to join the machine, we did a full reveal. It's in the first link in the description. You can go watch the video, get an idea of what entails this AI-powered machine. We take the best models in the world, supercharge them with the best data that they otherwise wouldn't have. And one of the things we were talking about, Johnny, was that the average market returns. The only market that sometimes has high impacts during government shutdowns are the defense markets because they're not handing out contracts. So that's the only, obviously we're to be determined. We'll see how this government shutdown plays out, how long it's going to be, and all that good stuff, and how long that impacts some markets. But notoriously, we've seen positive returns, so we should see some good stuff there. And regardless, I like their financials that you outlined there. It seems pretty good. And Rolly says, so many companies have good earnings, waiting until after APLD earnings to get in, think they have a high chance of tanking. And if they go, then, oh well, I heard some people talk about it. Yeah, exactly. Yeah, I think that's a good way to approach it. It's always risky to buy right around earnings, and I wouldn't tell anybody to buy right before earnings. And long term, I don't do anything. Short term, we look for potential trading opportunities. So we will be watching this week, and we'll be watching tomorrow morning. Julie says, I don't want to ask for too much, but could you please look at NAK before you leave, please? Alrighty, well, let's take a look. NAK, Northern Dynasty Materials. I've heard of this company. Let's see. They're at $1.13. $2.5 million in negative net income there, Drilly. And the balance sheet is hardly positive, about 2 million in equity, up to 3.68 million. Market cap's at 467 million, which obviously indicates they're being pumped right now. So you can see this pump, you can see this manipulation here in 2025. Really big manipulation up to $22. Who knows what happened there? Maybe they reshaped their balance sheet and things look better, but you can see they've been manipulated in the past. So I would probably stay away. You see that big cliff right there? Any stock like that's probably got to do something with insiders or maybe some institutional manipulation on the stock, but they're still trading above where their financials would make sense, really much higher than where their financials, their market cap should be. So just something to watch out for. Personally, I wouldn't invest in it. See that manipulation, you're gonna have some serious risk in a stock like that. So hopefully that's helpful, and I appreciate you all. And it says, hey, Will, could you take a look at BTQ, please? It could be an opportunity in quantum sector. Yeah, let me add it to the quantum watch list first. BTQ. And as far as BTQ, it looks like it just IPO'd. Does that sound right? So I wouldn't really have much for you. I don't know on the chart there, as it just IPO'd, so I don't have any data for you there. I don't trade IPOs very often because a lot of times they can be manipulated. When we look at their stock, there's not any positive income. It's all about negative on revenue. Balance sheet, you do see their total assets have been declining from 2024. Assets have been declining. Oh, they're up year over year, but quarterly, yeah, quarterly they're up, but you do see them decline the past 2 quarters down to 6.5 million. So current market cap for the company, we're looking at, kind of tough to tell here. It looks like if they just, let's see if they just launched. Don't know if we can get a market cap reading here on the company. 1.3 billion, and they have like less than $1 million in revenue. Could be way overvalued at this moment, and most likely we'll see some sell-offs after an IPO. I don't trade IPOs because a lot of time that's when hype is biggest, so I wouldn't touch it personally. That's just kind of yeah, how we kind of approach it. Awesome. So hopefully that's helpful for you though, Anna. Hopefully that helps you out. Drilly, thanks. Yeah, of course, Drilly. Thanks for tuning in. I appreciate you. And Tyler says, hey, Will, I'm a 16-year-old and own some Riccati. What should I do? Already made about $100, and I don't know if I should hold or sell. Tyler, the best thing you can do is put together a plan and then execute it. Doesn't really matter. If you're short term and you say, okay, I want this green, then go ahead and hold it. At $100 profit, maybe you're going long term. If you're going long term, then it doesn't matter. You want to hold it as long as you can. It really depends on your goals. If you're trading this stock because you're looking at it as a stock that's going to be valued 5-10 years from now, much higher, then yeah, continue to hold. If you're looking at it and you're like, I was just trying to trade, and it's not something that I'm, always following all the time, and I don't know if it's going to be worth that much 5 years from now, or I don't really see the hype there, then great, take your profit. Kind of getting a plan together will help you. Samuel, what's going on, Samuel? Hey, Will, hope you're well. Yeah, I'm doing well. Getting ready for some travel. It's my mom's birthday today, so had some nice dinner with her last night, actually, with my wife, and then things are good. We spoke around RZLV last time. Are you still not interested in this stock? Says Samuel. I'm also not sure if you mentioned above, also haven't done any research. What are your thoughts on Airship? Yeah, both stocks, RZLV had a higher liability set than they did assets. So I don't know if that changed in their last earnings. Yeah, they still came in the last earnings, 80 million in assets, but 94 million in liabilities. So I just don't touch stocks like that. Those are the types of financials that are usually followed by a bankruptcy announcement. So I just don't touch them. If they restructure a little bit, bring the liabilities down and get the assets up, we could definitely, I would have a more bullish outlook. Airship, AISP. Yeah, I mean, most companies that are in the aviation tech markets are seeing a lot of momentum. I think they also have way more liabilities. Look at that, way more liabilities than assets. Their liabilities are up to 10 million, and their assets, or their liabilities are up to 56 million, and their assets are down to 10 million. I mean, those are the types of announcements or things that are followed by announcements of bankruptcy. So, I don't touch stocks that do a lot of like 3D rendering of their stuff and don't really show the real world usage. And then they have like a lot of hype articles and they have, more liabilities. And then you like pull them up. I don't know if they're the over in the aviation tech. I don't think I even have them on my watch list. AISP. I gotta be careful what I put on my watches. AISP. You just, how I approach it, at least, you can kind of see, look at this manipulation. See this, boom, shot up and then sold down. And they're kind of holding this trend here. And maybe they're going to continue something like this from sentiment wise. But like I said, financials look very poor. And until that changes, I could be certain about being bullish with them. But again, almost every stock we start off, you'll probably notice uncertainty. And then it leads and ends in certainty. And to start off, pretty uncertain about the stock, and it hasn't really been changed in my mind much. At least I'm pretty certain I would not want to invest in it as of right now. But hey, that's just my opinion. If you see something specifically about the stock you really like, by all means, feel free to, invest in it. And if there's something there that you really see that you think others aren't identifying, I just spent a few minutes looking at it and the financials. So you might find something really valuable in it. Don't always just, if I don't think it's a good investment, doesn't mean it's a bad investment. Just take it how you'd like. And hopefully that's helpful for you. Chris, do you have any power stocks to watch? AI data centers. Yeah, we went over IREN and we went over APLD. We're trading TSSI this week as well. We're going to be trading them into tomorrow at market open. So you can kind of get a look at the data center market here. There's some of the stocks we're watching there. If you want to screenshot or however you want to do that. But yeah, we kind of went over some of them earlier here. Yeah, Anna, of course. Samuel, of course. Alex says D-Pro. Yeah, D-Pro. I mean, when we look at some of the tech coming out with D-Pro, I'm pretty sure most companies that are in the aviation and in this case they're doing UAV hardware, software. There's a lot of interesting stuff coming out with D-Pro recently. I noticed they have a lot of hype articles, so you got to be careful. But when we looked at their financials recently, they did come in with a lot more assets in the last earnings, up to 28 million. Net income still negative there, Alex, but market cap there, 321 million. Financials do look overbought, but sentiment on drone tech and aviation tech is pretty bullish right now. I've seen a lot better deals, and I see their tech. But I also haven't looked at their recent press releases. I know they got a U.S. Army supply Flex FPV drone systems. They might be signing some new contracts here. They're expanding their manufacturing. They do talk about what could be a lot. Like, we're uniquely positioned to support Canada's new $2 billion military commitment. But like, they didn't get the deal. They just say, there's opportunities. And there's some of that I see. And then when you look at their financials, they're still negative and haven't seen much revenue. So kind of a little bit red flaggy for that reason. But they're innovative and they're in the right market right now. And so if they do continue on the way they're going, they see some contracts come up, I could see them, see some growth. Definitely, it just really depends on the market though, because they haven't seen it right now. There's definitely not going to be any government contracts, that's for sure, with the government shutdown. But yeah, I mean, it's an interesting play, Alex. I do appreciate you bringing it up, and I'll actually add it to the watch list as well. And I appreciate you. Thanks for tuning in, Alex. And Samuel and Anna and two brothers, Redwire. We did some analysis on Redwire earlier, so I appreciate you guys. If you missed the reveal of the machine this week, go check that first link in the description. We did a full reveal. And if you want to know how to use AI to help you streamline your analysis, it's a great video for you to learn so. If you want to join us at our Market Open live session tomorrow morning, we will be there trading live tomorrow at Market Open. We're there every day, Monday through Friday, and it's pretty early, about 6:30 a.m. Pacific Standard Time. But if you're on the East Coast, it's not so bad. And if you would like to join us, tune on in. It's the second link below, and you get a free t-shirt when you join, along with all the resources you need to learn AI, quantum, data center, defense, or nuclear, semiconductors, all the top industries, quantum that we're watching, and how to invest in them with the fundamentals and the technical analysis. It's all in StockMate. We got the earnings for the week. We got a community of over 24, over 24 millionaires in the community. And next live trading is happening in 13 hours. So would love to see you there tomorrow. Appreciate you all. If I earned your thumbs up, hit the like button. Do consider subscribing. And I'll see you in the next video. Take care.